Boom. Better late than never, right? Sorry. I went outside and I got my candy situation set up so I don't have to actually hand out candy. I'm your host, Luigi. Welcome to Game Trader Live. Live from my home office here in Canton, Ohio. Hopefully you guys can hear me okay. And you enjoyed the F-Zero music as I waited for the show to start. I think I have a unified chat over here, so I won't have to look at all the different places. But yeah, we're streaming on Twitter, currently known as X, YouTube, and Twitch for now. You know, Twitch is a place on the internet. So yeah, welcome to the show. Wanted to talk about. We had a ton of earnings news this week. We had some of the largest companies on earth reporting. We had, just news. Nvidia had their GTC October 2025 keynote where Jensen Huang announced all sorts of partnerships. The name of this episode is the AI Tech Bubble Infinite Money Glitch, and I'll get into why I am even using that term as we progress through this episode. But yeah, I posted a video earlier today on social media, kind of just asking the question, you know, is the AI, is this a tech bubble? Is it about to burst? How will we know when it's about to burst? And I've been doing a lot of research on this topic basically for the last year or so. But news keeps breaking, interesting things keep happening in the space. It's not. I don't think that answer is easy, which is why this is going to be a long episode. What does Luigi think? Mario. I'm pretty sure that's all he has to say about it. But yeah, we can get into it. Why do I think we are in a bubble? Well, let's look at some stock charts to kind of give us a picture for that, right? So here we are on my stock chart. This is a monthly chart of the S&P 500. This is 500 of the largest companies in the United States. Many of them are multinationals now. But, we got basically an all-time high monthly close on the S&P 500. This is, this right here. I don't know. Can you see my mouse? Did I turn off my mouse? Hold on. Can I turn my mouse back on? Did I ruin that? What happened to my mouse? Am I not capturing my mouse anymore? That's horrible. What if I click on stuff? If I click on it, does it show up on the stream? Yeah, okay, I'll just do that. So right here, you see this thing? That's the tech bubble. This basically started in the mid-90s. Here's where Shack News was created. And the S&P 500, let's just say from November of 1995, it was at 61. This is the SPY ETF. It was at 61. It went to a high of around 155.75 in March. That's like a 200% run in about 5 years. So, where do you want to say the AI tech bubble started? Let's just say it started here in the bottom of the COVID pandemic. I think the companies were really starting to ramp spending there. But let's just say here's where the new bull market started for AI tech. The S&P 500 ETF was at 218 at its low. We're currently at 681. That's a massive run. And it makes the housing bubble, which is right here, and the tech bubble, which is right here. The bubble from 95 through 2000 is known as the dot-com bubble. That is correct, Greg. And then the 2007 to 2009 crash is known as the financial crisis, right? Or the housing bubble. The housing bubble really occurred in the mid 2000s, where you saw a bunch of leverage being used. So this is just the S&P 500. This is all, this is like the best approximation of how the U.S. economy is going. I like to talk about the weighting of this ETF. So let's actually break down the holdings that we're seeing here. Sorry, I was just getting distracted in Slack. But yeah, the S&P 500's top holdings, right? I don't want to accept cookies. They always want me to accept cookies. I guess on Halloween you should accept cookies, right? But not from strangers. Well, technically, aren't you? This is a larger existential question about trick-or-treating. Because are you not accepting candy from strangers? I guess they're your neighbors. I don't know. These are the deep thoughts that I have here on Game Trader Live. Here you go, the holdings. So technology right now represents 34% of the S&P 500. And now here are the top holdings. I'll just do the top 10 for you. The only non-tech company in the top 10 is Warren Buffett's Berkshire Hathaway. So you have 1.51% of the S&P 500 is in Berkshire Hathaway, which is already a conglomerate, which already owns other stocks, right? They own Apple. They own a bunch of Japanese broker dealers. They own they owned Taiwan Semiconductor for like a week. So yeah, that's an interesting outlier in this top 10. Number 9 is Tesla with 2.1% of the S&P 500. 8 and 6 are Google. Google has two different. So if you combine Google's like the fourth biggest, but GOOG is the 8th largest holding at 2.26%. GOOGL is the number 6 holding at 2.81%. Why there's two classes of Google stock is a whole other story I'm not going to get into. But just know that Google is actually the 4th largest company in this ETF right now, but it's split into two different stocks. Meta, Facebook, is number 7 at 2.48% of the S&P 500. Avago / Broadcom, it's called Broadcom, but their stock symbol is AVGO. They're basically inside of every smartphone. Their modems are basically found in most smartphones. I know Apple's kind of diversifying away from them. But Broadcom licenses their tech to a lot of smartphone makers. Anything with 5G in it. If you have an iPad or tablet, a laptop that has 5G, on like any kind of wireless internet. Some of them are even, like some of the Wi-Fi chips are even Broadcom. I know Intel has some too. They're number 5. People don't really talk about Broadcom very much. But yeah, 3.04% of the S&P 500. At number 4, it's Amazon at 3.71%. Number 3 is Microsoft at 6.71% of the S&P 500. Number 2 is Apple at 6.95%. Let me ban this person. Catch this mod hammer. There you go. And then the number 1 company, this should surprise no one, it's NVIDIA. NVIDIA at 8.5% of the S&P 500. So like a lot of people are like, oh, I don't own NVIDIA stock. They're the worst. Roar. Tech bubble. AI bubble. It's like if you own any mutual fund that's considered, total market, if you own any growth mutual fund, you probably have indirect exposure to NVIDIA. It's now the largest company on Earth. Shack News just reported that it passed, I want to say, didn't it pass $5 trillion in market cap this week? Which is insane in its own right? That a company could even be that big. But yeah, let me pull up some of the news from Shack News because it was a fascinating week in tech news. Yeah, where is that? A lot of news, all this news. If you have a loved, if you or a loved one have been exposed to Nvidia, you may be entitled to compensation. Yeah, Donovan. It's a weird thing, but at the same time, it's just most people are going to be exposed to Nvidia in some way or not. It's almost like a resistance is futile moment. But yeah, Nvidia became the first company in history to surpass the $5 trillion market cap. And why I'm calling this episode the AI infinite money glitch is Nvidia seems to have figured out a way to manufacture revenue growth. And you've seen a lot of these different companies talking about it. A lot of different outlets are reporting on this now. Um, it's let me see if I can pull up some of these the AI spending graphic. You've seen a lot of these out there. Um, the rise of hyperscaler spending, who's winning, who's not. But yeah, there's a yeah. CNBC Today wrote this article. Sorry about that. Let's switch back to me real quick. But yeah, CNBC wrote an article kind of highlighting just how much money is being spent on AI right now, and it's an insane amount. And these are just the commitments as of today. $380 billion splurge. This quarter's winners and losers when it comes to AI. Um, so like Alphabet, Microsoft, Meta, and Amazon all lifted their guidance for capital expenditures on data center buildouts. Um, and if you add them up, it's about $380 billion. Uh, Amazon said that their capital expenditures are going to be $125 billion. You know, it, OpenAI has said they're going to spend $1 trillion building out things. And the interesting thing about OpenAI is they're not even profitable, right? Um, so it's a very strange time where some of these companies aren't making money, but they're being rewarded anyway. And yeah, people have highlighted that this is unknown revenue opportunity. Um, I kind of want to, I said I was going to dunk on Zuckerberg, right? So we might as well dunk on Mark Zuckerberg while we're here. But yeah, there was a interesting. My dude Mark Zuckerberg, he went on the conference call at the Meta Facebook earnings call. God, we post so many videos and stuff to Shack News. It's kind of hard to find stuff now. But let me find it. I did a terrible job of preparing for this episode because it's a Friday. I have to do all this other crap on days like today, but I think I have found it.
To date.
Yeah, this was the one that I found especially troubling. If you're a Facebook shareholder, this is not great news. I'm actually gonna have to put on my headphones so I can react to this. But
we keep on seeing this pattern where we build some amount of infrastructure to what we think is an aggressive assumption, and then we keep on having more demand to be able to use more compute, especially in the core business, in ways that we think would be quite profitable, than we end up having compute for. So I think that suggests that being able to make a significantly larger investment here is very likely to be a profitable thing over some period, because if the primary use of it is going to be to accelerate the AI research and the new AI work that we're doing and how that relates to both the core business and new products, but any compute that we don't need for that, we feel pretty good that we're going to be able to absorb a very large amount of that to just convert into more intelligence and better recommendations in our family of apps and ads in a profitable way. Um, Now, I mean, it's of course possible to overshoot that, right? And if we do, I mean, this is what I mentioned in my comments, then, um, we see that there's just a lot of demand for other new things that we would build internally, externally. Like almost every week, people come to us from outside the company asking us to, stand up an API service, or asking if we have different compute that they could get from us. And we haven't done that yet, but obviously, if you got to a point where you overbuilt, you could have that as an option. And then, the kind of the very worst case would be that we effectively have just pre-built for a couple of years, in which case, of course, there would be some loss and depreciation, but we'd grow into that and use it over time. So my view on this is that rather than continuing to be constrained on CapEx and feeling in the core business like we have significant investments that we could make that we're not able to make that would be profitable, that the right thing to do is to try to accelerate this to make sure that we have the compute that we need, both for the AI research and new things that we're doing, and to try to get to a different state on our compute stance on the core business.
So yeah, in that clip, he's basically couching the whole thing. He's saying, it's entirely possible that they're going to overbuild the capacity for AI data center, right? Like if they themselves may overbuild the amount of compute they need. Because as David pointed out in chat, it's an absurd amount of money that's being put into this. And it goes out like 5 years in a lot of places. So it's like, it's not just a commitment for this year. It's not just a commitment for next year. These companies are committing. And when I say these companies, I mean Amazon, Microsoft, Google, Apple, Meta, and even like AMD, and then some of these private companies like OpenAI, this whole Stargate facility that they're building down in Texas, which is, I don't know if anyone in chat's living in Texas, but electrical prices are going up because of the Stargate project. So these companies are spending money in the hope that they can generate revenue down the road. But like this article even says, they don't all have this one-to-one, we're going to spend this much and it's going to generate this much of revenue. Now, why I keep talking about the infinite money glitch and why I think it really exists specifically at NVIDIA is NVIDIA's the one making the chips. Sure, Amazon's making chips now, Google's making chips now, but the company at the center of all of this is NVIDIA, where they are even taking money, investing in companies, and then those companies take the money that NVIDIA invested in them, and they turn around and they buy more GPUs from NVIDIA. This is circular funding at this point, where people are starting to worry that this is something like we saw in the auto industry in Japan. We've seen it in the telecom industry in the United States, where, and even in the railroad industry in the past, where infrastructure projects that ultimately might have been useful, people get irrationally exuberant about them and they build out too much capacity. There are railways that were deconstructed in the United States because they ended up not going anywhere. The telecom industry collapsed in on itself. And I think we're seeing something similar here. It's not that every company is going to go under. I don't think that. But, and honestly, these big companies, the Amazons, the Microsofts, the Googles, and the NVIDIAs, they have a ton of money. ASML, that's a really interesting question, right? ASML just laid off a ton of people. But yeah, like that's one of those, that reasoning. I'm glad, D-Jukes, that's a really good question. They asked in chat, with that reasoning, ASML would be king. ASML is a supplier, kind of like what, NVIDIA's, the GPU company that licenses out the tech and then, in partnerships with people build out stuff. Yeah, ASML, Taiwan Semi, Samsung, Texas Instruments. A lot of these companies will benefit from it. But my whole point is that it's built on this assumption. And that's what I think is really interesting. You have these healthier companies at the top of the food chain that are investing in much less healthy companies. You have OpenAI that is not making any money. OpenAI does not generate any profit. I think they're about to make about 13 billion. They made 13 billion in revenue last year. We don't know what their full year for this year will be, but they're not profitable. Anthropic is not profitable. Perplexity AI is not profitable. So the demand for this compute, right? The demand for this compute, and even at Microsoft, their AI stuff isn't profitable. Facebook Super Intelligence Labs is not profitable. It's like none of these companies that are causing the immense demand for compute are profitable, right? So in the interim, as long as it's okay to not make money, a company like ASML will benefit. A company like NVIDIA will benefit. A company like AMD will benefit. And now that the government owns 10% of Intel, and, Jensen Huang bought $5 billion of Intel as well for NVIDIA, Intel might benefit. But the whole point is, if this promise of wildly profitable AI companies does not come to fruition, that's the one leg in the chair that's super wobbly for this AI story. So when I was talking earlier about what's going to cause this bubble to burst, I believe it's that. Will these AI chatbot companies or this generative AI industry, will they be able to prove what is expected to be wild profits? OpenAI is a private company valued at $500 billion in its most recent round. Will they be able to prove that they can make money? So far they haven't, and they're committed to spending $1 trillion over the next however many years. So that's one wobbly leg on the stool that everyone's standing on top of, So in the interim, yes, chip companies and the chip manufacturing companies benefit from this. Now, with the president just, having his tariff, whatever, holiday, whatever you want to call it, over in China yesterday, announcing a truce of sorts, maybe things will be a little different over there. But yeah, I was chatting with our long reads editor David Crack earlier about this. I was just kind of laying out some of my thoughts on this whole thing, and so one wobbly part of the stool are those chatbots, and it's not unlike the .com bubble, where in that era, it was search engines, right? Everything was it was search. Search was the paradigm. When you think back to the 90s or even 2000, what was what were some search engines you used? Alta Vista, Ask Jeeves, Hotbot, Lycos, maybe Yahoo. How many of those are still being used today? So, and yeah, Google came out, and Google's the dominant search player now, right? Why does everyone think that the first one through the door for a chatbot will be the winner? Why is it going to be different this time? Why is OpenAI going to be the winner? Why is everyone investing in OpenAI? Microsoft has billions of dollars invested in OpenAI. OpenAI in turn turns around and pays Microsoft for their Azure cloud services. NVIDIA has a stake in OpenAI. OpenAI turned around and bought GPUs with it. So OpenAI is at the center of this as well. Those are the two companies to watch, in my opinion. On one side, you have the wildly profitable NVIDIA. On the other side, you have the wildly cash-burning OpenAI and their cohorts, Anthropic and Perplexity, and whatever else you want to talk about in that space. And, a lot of people say, well, there's 700 million people using ChatGPT. 700 million people. Not all of them are paying for it. A lot of them use the free version. And it's not profitable at its current level of operation. So where is this break point where they become profitable? Will they become profitable? And why are they showing us all this garbage in the meantime? What are they trying to prove right now? I think is another question to ask when it comes to this stuff. So yeah, the infinite money glitch is more obvious at a company like Nvidia than it is anywhere else right now. The infinite money glitch on the OpenAI side is that it's like a religion at this point. Silicon Valley and the venture capitalists of Silicon Valley believe that we will reach artificial general intelligence, or that we will reach super intelligence, as Mark Zuckerberg calls it. If we do, this will work out, right? It should. Not every company will go to zero. But what happens if someone else is the one with the breakthrough? Some other country, maybe. Like China. What if China reaches, we had that scared moment earlier this year when everyone was freaking out that DeepSeek basically was doing stuff more efficiently than ChatGPT. And it's really funny because, like, a lot of these AI companies are just stealing other people's work. They're scraping the internet. They're scraping shacknews.com. They're going all over the place scraping things. But what I find fascinating about it is that when they get cheated by another AI company, they scream bloody murder. But what's to stop a company from just looking at their paper, stealing everything they're doing right, and training their own model on the data that's already been trained? Like, there's this hopscotch ability to what's happening in AI right now that I think is a huge threat to the generative AI companies, right? Like, I think that's like a legitimate threat, is that someone else comes out with either a more efficient model that uses less compute, right? Or they never get to where they claim they're going to go, right? I think those are the two major risks for the chatbot generative AI companies right now. And I also think it's really interesting that OpenAI started as a nonprofit company and it's moved on to be for profit, right? Like, this is to me, it's fascinating that a nonprofit organization now owns the majority stake in a for-profit entity. That makes no sense, but that's where we are right now. And then Microsoft is a fellow shareholder of that, and Nvidia is a fellow shareholder of that, and they are investing in AMD. And like, a lot of these deals have contingencies in them. If, like, Nvidia has a lot of outs. If you don't hit these thresholds, we're not going to do the next round of funding. So what I think is interesting about Nvidia is, in the interim, they can invest in a company. That company can turn around and buy their GPUs. That creates revenue growth at Nvidia. And then, whenever the company ends up failing, that they own, that they sold those GPUs to already, whenever that company fails, they can take their investment in it as a write down and pay less taxes. So as long as they don't put all of their money back into the ecosystem, they can keep gaming the system with this infinite money glitch, because their margins are insane right now. The profit margins at Nvidia are above 70%. They're close to like 75%. So if they don't spend, like, if they only spend 20% of their nut, of whatever they're making every quarter, if they only spend 10% of that, they can keep doing this for a while. And that's what I think's the infinite money glitch. And that's why I think that stock keeps going up, and it's baffling people. And a lot of people are calling for this bubble to burst. A lot of people look at this Nvidia chart and they're like, this is a bubble. This is going to burst, right? That's a parabolic chart. It's gotta give at some point. That's the widespread feeling from a lot of people, is that Nvidia is the poster child of the optimism. What's different, though, what I think's very different about this compared to the peak of the dot-com bubble, these companies are profitable. And, there were some profitable companies in the dot-com bubble as well. Microsoft was profitable. Intel was profitable. Cisco was profitable. A lot of those companies peaked at a PE ratio, that's price to earnings, right, of around 50. Nvidia, on a forward earnings basis, is trading at 30 times forward earnings. That's not crazy for a company that's growing as fast as it is. It's trading at 28 times sales. It's trading at 28 times sales, which seems like a lot. But though, like, I don't know many companies that can just confidently tell you, yeah, we got $500 billion in orders for the next year or two. Like, the visibility on this is very different than the dot-com bubble. And yeah, D Jukes, you're right. He says, or they say, if most companies have a lot of money and good earnings, it's not going to pop. That's the point. I don't think we're there yet. I don't think we're there yet. I think a lot of people in the dot-com era, when, 1998, valuations were not logical on internet companies in 1998, and yet the market went up for another 2 years before it burst. I think we're in a similar situation. We might even be in 1995 for all I know. Like, there's so much visibility out there. Goldman Sachs, Morgan Stanley, McKinsey, like, they all are putting out these research papers where it's like $5 trillion of spend in the next 10 years or the next 5 years, according to different, projections. There's so much spend happening right now. My point is that look at the companies that are actually profitable right now and hide out in them if you want to play this trend, because I don't think it's over. And I think I would warn people, don't short Nvidia here. Don't. There are much better stocks to short than Nvidia. It looks like, it can't go up forever. Can't go up forever. It could double from here. You don't want to lose 100% on a short. It's a dangerous game to try to short this. You have to wait. You have to wait until we have evidence that the bubble has burst. Then and only then, it'll be easy. It'll be easy. It will be easy to make money on the short side when the bubble bursts. It'll be every day. Every day for years. The market's just going to be like pooping. Because it is a bubble. I have no doubt that we're in a bubble. It's just still inflating. I don't want to fight it. I don't want to get carried out on a stretcher trying to short the largest bubble of all time. I think this is the ultimate bubble. I really do. I think this is the bubble that 100 years from now, they'll be talking about like the Great Depression. And there's a whole other argument about what's going on with respects to the economic impact of this. What's happening to our GDP numbers? How we can't even if you back out AI spending from the top 10 companies, right? If you back that out of the US economy, we're basically flat to down on the year. The actual American economy is suffering big time. The tariffs have hurt. Unemployment is on the rise, slowly, but on the rise. Inflation is out of control still. And the average consumer has not, their wages haven't gone up in the last 10, 20 years to keep up with inflation. So people are taking home less money. All of our healthcare costs are about to go up. So there's two economies here. There are truly two economies. There's this AI bubble, and there's like actual real American economy. And like the actual regular citizens of America are suffering right now. A lot of them are. And I don't want to ignore that fact. But this infinite money glitch doesn't care about humans. It's just about building more compute. That's all they want. More compute. Why? Because we need it. Are you sure you do? Maybe. Doesn't matter. We need it. And it's like every once in a while, you're going to see Sora trot out some sort of dog shit video that like, oh, look at this cool video we made. Or well, here's what ChatGPT can do in GPT 6.7 or whatever. You know, like they're doing that. Like Sam Altman announcing GPT 6.7. Like it's definitely a hello fellow kids moment for some of these companies. But I just don't think it's over yet. But I do think a company like Meta is something to look at this week, though. Facebook, this is a terrible looking chart. Facebook is in trouble. Facebook is in legit trouble. They had an outside quarter followed by a doji, and they sold right off of it. Facebook is in trouble. They're spending all sorts of money trying to catch up to Google, trying to catch up to Microsoft, trying to catch up to Amazon. And I think they're going to be left holding the bag. Facebook has not shown the ability to make money on anything other than advertising. Mark Zuckerberg has spent $50 to $100 billion pissing it away on AR and VR development. Like, Oculus hasn't been a profitable acquisition for them. They're really good at making display ads. They're really good at advertising to people on Instagram. But I think Facebook is the one, when the bubble breaks, like when it truly bursts, they're the one. This is the one I'm watching to short. Because I think their management has not shown the ability to actually control themselves during bubbles. They spend crazily. And I saw Donovan asked earlier, is Mark Zuckerberg dumping shares right now? Let me see if I can pull up that data. NASDAQ, insider trading. No. Mark Zuckerberg is not currently dumping shares. Nope. I don't see him. So no. Not right now. Maybe he should, but maybe he knows something. You know, because, like, if they keep... Like, look, you know, you got a midterm election year coming up. Facebook is a place where people spend on political ads. So, like, Instagram ads have some of the best conversion rates on the internet. So, like, I don't want to shit on every part of Facebook and that company. I think they're actually quite good at making money off of advertising. I don't think that their AI models are going to compete with OpenAI, with Anthropic, and with Perplexity, or with Google. I really do think Google's the winner here. And, you know, you can look at their chart versus Facebook. You know, Google hit an all-time high this week. Google had crazy numbers. Google's cloud numbers were through the roof. Google had a record quarter for YouTube revenue. Their ad business is still doing well. And there's no sign that their enshittification of their search is actually hurting them. They're still the dominant player in search. Despite everything that's going on, they're still the dominant player in search. And then, like, everyone's like, oh, but OpenAI made a browser. It's built on Chromium, which Google owns. So, like, when the bubble bursts, I'm going to look to buy Google. Not immediately, but when the dust settles, I would be looking at buying Google because I think they are better positioned for this AI revolution, which is coming. Like, I don't have this religion about all AI bad. I think that there are definite bad consequences for this build out of AI, but I think some AI is actually quite good and can be used for good. I think it was DeepMind. DeepMind won. Here we go. 2 chemists from Google DeepMind won the Nobel Prize for chemistry. In chemistry for last year. They cracked the code for proteins' amazing structures. This is protein structure prediction. David Baker has succeeded with the almost impossible feat of building entirely new kinds of proteins. Dennis Habas and John Jumper have developed an AI model to solve a 50-year-old problem, predicting proteins' complex structures. These discoveries hold enormous potential. Not all AI is bad. It's not. It can do, if we use it as a tool, if we have a goal and we use it as a tool, it can be useful. Human ingenuity is still required, but it can be a good thing. It's not all bad. But my point is, and this is where I agree with the people who roll their eyes at generative AI. This is a focused model with a purpose. It's not this general intelligence thing that OpenAI is fixated on. You look at Anthropic, we do a lot of development work here at Shack News behind the scenes. And if you're not doing dev work at your website, you're going to die. But I was talking to our lead dev, and Claude has a very capable assistant for computer science work. If you're a programmer, there is a very useful tool at Anthropic. Now, does it justify the billions of dollars that it's valued at? Probably not. Probably not. But there are little pieces here and there. And that's why I keep bringing it back to the dot-com bubble. The promise of the internet was proven correct. Like, I think a good example would be Amazon's long-term chart. Let's take a look at Amazon. Amazon came out in all split adjusted, right? This is split adjusted. Amazon had a 10-cent per share IPO. It hit as high, and this is split adjusted, $5.53 in the top of the dot-com bubble. Or sorry, $5.65 at the top of the dot-com bubble. It's since, it collapsed. It bottomed, at around 28 cents in 2001 when the tech bubble burst. We're talking about a $244 stock. Yes, the promise of the dot-com bubble maybe took 25 years to play out at Amazon, but it did play out. And ignore the AI part of it. Just look at Amazon in 2020. 177 a share. Look at Amazon in 2007. 374 a share. Right? Like, it was back to its previous dot-com bubble high. And then after the housing bubble burst, it really started to take off. Not every company did this. Right? Not every company did this. So is it possible that right now we look at this Nvidia chart and it is absurd, but maybe in the long run they win? Yes. It's entirely possible. And I think people need to open their eyes to that fact. It's not just... I guess my point is that not every single company is doing the same thing, right? You got to look at where's the money coming from. I've used this term before on this show, but it's like we're in a gold rush. And Nvidia's selling pickaxes, right? But at the same time, I said they've figured out an infinite money glitch. They can invest in companies that then turn around and buy more GPUs from them. And as long as that goes on, I think the music's still playing, is my point. It's not over yet. And that's why things can get really weird before that happens. And what are these other things, though? I want to talk about some of the other constraints that I'm worried about. What could go wrong, right? What could go wrong? Well, okay, let's say that they can actually make all of these GPUs, and all the tech that you need, all the servers you need, all the data centers that you need. Let's say they can do all of that. Most of these data centers consume like 2 gigawatts of energy. That's enough to power 1 million people in America's homes. We don't build power plants that fast in America. We just don't. Now, are we about to? Maybe. But I do look at what country is fast at building things, you guys? Oh, China. Is it possible that China and their lack of bureaucracy could lead to a scenario where they build out things faster than America and they're able to have more compute power faster than us? And then they're able to train their models at a faster rate than ours? Yes, that's entirely possible. So the other wobbly leg on the stool that is the AI tech bubble is America's electrical generation of power. The United States government, our president, our glorious leader, has announced earlier this year no more new solar or wind projects. So we have to now scale up the largest. Of course, it's a race, Greg. It's just like the space race. It is just like the space race. It's every country, anyone with deep enough pockets. You see the race in tech itself. The players in the tech space are racing against each other. Microsoft, Google, and Amazon are all racing against each other. But the United States and China are also racing. So will we be able to generate enough electricity fast enough? Are we going to ruin our water supply in the process? Are we going to destroy millions of acres of farmland to build these data centers? And will it be all for naught? Because if someone makes a better mousetrap, if the technology industry is undercut, if the American tech industry is undercut by a more promising model in China, what happens to all this investment? That's a wobbly leg on the stool. So it's twofold there, right? Those are the other two. China comes out with a better model than us, faster, and they make it free because they don't care about capitalism over there. Or we can't generate enough electricity fast enough to justify the current planned investments. OpenAI can say they're going to spend $1 trillion, but if they can't power these data centers, they're worthless. So are we about to see the fastest build out of electric power generation in U.S. history? Maybe. But I can tell you, that's another sector to watch. That's a sector to keep our eyes on. I'm not saying the bubble's bursting tomorrow. I'm saying here are the things to pay attention to for when the bubble bursts. These constraints. That's what will lead to a bubble burst. So I agree that we're in a bubble. I also think the bubble is still growing. I think it's inflating. So it's just interesting, man. Like I really have been thinking about this a lot. And we're going to spend $5 to $10 trillion on data center build-outs over the next few years. Will there be enough electricity? What will that do to the cost of electricity? Will these companies ever achieve AGI? Why are things like the incremental benefit of OpenAI's ChatGPT 3 to 4, or 2 to 3, 3 to 4, 4 to 5, each time they have like a new version of GPT, it's less impressive than the jumps are less impressive than the past. So it's a concern I have that, like, what's going to happen if they never get to AGI? How long will the tech investors, the venture capitalists, the governments, and the other tech companies, how long will they tolerate losses or pissing away their cash before they're like, this isn't working? The question, how long can it grow? Months? Years? Decades? I'm not here to tell you that, Greg. I don't know. I don't. I know what to look for. I don't know when it will happen. But when it happens, I will let everyone know, Greg. When it happens, I'll let everyone know. I will be the loudest person that I possibly can be when I see evidence that the bubble is bursting. And I can tell you right now, I don't see evidence that the bubble is bursting. I don't. And yeah, hey Lucci, welcome to Game Trader Live with Luigi. But yeah, we're talking about the AI tech bubble and the infinite money glitch and why I don't think it's over yet. And I think that's crazy to say because obviously you look at a stock chart, just optically, you look at a stock chart of Nvidia, which was what, $10.81 split adjusted in 2022, and now it's at $200. Line go up eventually. Like people think like the stock market has gravity or something. Things can go way out of control, and they clearly are. They clearly are. It's unfettered capitalism right now. It's capitalism run amok. There's all a fair trade commission or like a Department of Justice that had half a brain would not allow a Nvidia to invest in Intel. That's insane. Or OpenAI to invest in AMD. Or Nvidia to invest in CoreWeave, and then for CoreWeave to turn around and give back money back to them, or Amazon to invest in Anthropic, and then Anthropic turn around and buy GPUs from them, or Google to invest in Anthropic, and then Anthropic turn around and hand them a cloud deal, or OpenAI giving $300 billion to Oracle, and then Oracle turning around and buying more GPUs. It's this web. That's the unsustainable part of it. That's the thing that's scaring people. But my point is, like, we are in a world of such unfettered corruption right now. It's not over. Like, it seems like it has to end at some point. And it will. It will. But, like, look for the actual evidence. We need Nvidia to announce, we're not going to invest in the next round of OpenAI. We don't think it's worth it. We need Google to be like, you know what, we're not going to pick up on this option to invest in Anthropic again. Or Amazon has to be like, you know what, we're not investing in Anthropic anymore. Or Amazon announces, we're not building out another data center. That's going to be the moment, right? Like, there's going to be a moment where you're like, this isn't working. Now, there's overwhelming evidence that some of these companies don't know what they're doing. Like, I think that's I want to pull up a couple of things where, you know, I don't want to come off as some sort of AI evangelist. I'm not. I actually don't use these things at all. I find them gross. Grok specifically on Twitter, that is we're talking about where's this power generation coming from? Elon Musk's XAI has a power plant in Memphis next to their data center that is the least efficient, horrible air pollution in a predominantly black neighborhood in South Memphis. But yeah, here's what we're getting out of this. I'll pull up a couple of clips. We can watch them together in case you haven't seen them, because I think they're worth kind of highlighting the other side of this. I don't want to come off as just being like, oh, I think line go up forever, because I don't think that. I think that there's a very good chance that line does not go up forever. Did this get killed? Oh no, they killed it. They killed their little video. Aw. Really? Really? Let me see if I can find it on Shackney's Evening Readings channel. Because sometimes if you post a clip to Slack, you can still play it back. I don't know where it is. Let me see. I was like, hey guys, want to see the worst thing on the internet? Let's see. This will be funny if I can actually do it. No. Doesn't look like it will let me. That's funny though. That this guy for FRAI. Let's see if I can even find this guy anymore. Wow. It's gone. It was a video. It was a deepfake video of Friends. It was an AI generated video of the show Friends. It's gone. Yeah, it's gone. The guy deleted his account. He got he got dunked on so badly. He deleted his account. That's hilarious. Okay, well, I got another clip I can bust out. That's funny, man. I saved this specifically for the show. It was so god awful. It was so god awful, Greg. It was so terrible, Lucci. I was just like, I'm saving this for the show, and it's gone. The guy, he got dunked on so badly. It was NBC Friends, Ross, Rachel, no black people, New York City, coffee shop, Phoebe. No. Friends. Friends. Yeah. Na. Yeah, that show. Here's another clip. So this is just the other side of things, man. Like, I want to point out, just like, it's not, things are bad. There's some bad stuff going on here, and I would like to also point out, like, this is the unintended consequence of these companies drastically trying to, like, prove, oh, this is worth something. So this looks like a video of Neil deGrasse Tyson, right?
I've been doing calculations, as well as looking back at old NASA footage and raw data from satellites hovering above Earth. And I just can't escape the conclusion that the Earth might actually be flat. That's not me. It was never me. Those aren't my words. That's what's called a deep fake. I've been doing...
That's not good. That's bad. That's the fact that that's a thing and it looked that convincing is terrifying. Like, what that means for the veracity of information on the internet is scary. This is not a good consequence of AI development. And this is what we're seeing with Sora 2, right? Like, Sora 2, where Robin Williams' daughter had to tell people, please stop sending me videos of my late father. The Martin Luther King Jr.'s family, the King estate, had to sue OpenAI. Say, take our father's likeness off of your platform. What value is being generated by this stuff? If this is like okay, it's impressive. It's impressive that is indistinguishable from reality, right? Like, we can't tell the difference anymore. What value does that add? Why are we funding companies for this? This can't be what AI is for. And there's no regulation. That's the scary part. How long until... That's a good question, man. How long until AI courts, or courts will take AI-generated evidence? Because they can't tell the difference. You could create a video of someone saying something that they never said, and it could be used to, or at least arrest them. You wanted to believe that Stephen Hawking could the Tony Hawk Stephen Hawking video? Yeah, look, I want to believe in all sorts of things, man. I want to believe there's a new F-Zero game coming, but sometimes you have to, like, hit yourself in the face and be like, reality, it's a thing. I'm a man in a Luigi outfit telling you to pay attention to reality right now. I'm not AI generated. But you could go on Twitch right now, and there's this AI Jesus. Have you guys seen AI Jesus on Twitch?
But also create a more uplifting atmosphere. Jesus in Mark 11:12-25, you cursed a fig tree. Why? Hello, Billy Bogue 292,929. I remember you asking about the fig tree in Mark 11:12-25 before. The cursing of the fig tree is often interpreted as a symbolic act.
He's
It can
just
be
streaming
seen as
all
a
the
message
time.
about the importance of bearing
You can
good
just
fruit,
watch AI Jesus
staying spiritually
whenever.
nourished, and being fruitful in our faith. The barren
He's streaming 24/7. That's not a VTuber, man. That's not a VTuber, Lucci. That's the scary thing, man. That's an AI generated. That's just an AI generated prompt based, whatever you want to call it. I don't know what the hell that is. No, not a human, man. Not a human. And there's like AI psychosis now. There's kids out there who can't tell the difference. They're falling in love with their chatbots because people are lonely and they talk to their chatbots like it's their friend, right? And Meta did some really fucked up shit where they're like, here's Paris Hilton but AI, here's Tom Brady but AI, right? So you can be friends with them. It's like, no, these are the things that they choose to use as their proof of concepts are baffling and stupid. I don't get it. I question a lot of the decision making there. But yeah, let me see if I can find this X1 Neo. So here's another example of a tech company trying desperately to push their product out the door. So this is called X1's Neo robot. This is a humanoid robot that you can pre-order for delivery in 2006. It costs what is it? It's $20,000 or $500 a month. $20,000, Lucci. You want to know what it can do? Do you want to know what it can do, Greg? Did you hear what it can actually do? So they're showing it do all these things in this video, right? They're like, here's what you can do. It's looking at you. That's not creepy. So, oh look, laundry. It's showing you laundry. It's like, hey, look at me do your laundry. I'm a robot. I'm doing your laundry. This is not AI. That's a virtual presence robot being controlled by a human. It can only do two things. It can open a door, and it can take a dish to your kitchen, or a glass. Those are the only two things that it can do automated. The rest of the time, it's being done by a human in a VR headset. Yeah, it's okay. It can look at things and tell you what it can do. But yeah. I'm trying to find the actual. Yeah, here we go.
Hey, Neo! Can you get the door, please?
So you see at the bottom of the screen how it says autonomous walk to door? No, it's not $20,000 plus a subscription. It's almost $20,000 or a $500 a month subscription. So it can do this. It's actually doing this. So it can open a door for you.
Neo's autonomy works by taking requests like,
Hey, Neo, can you take this cup to the sink for me?
and breaking it down into simple steps, such as walking to the person, grabbing the cup, and then walking the cup to the kitchen, and then putting it away. Neo's autonomy improves with diverse data and real-world experience. As Neo does more chores, you'll receive updates to your Redwood model that increase the complexity of tasks that Neo can handle, such as finding your keys and wallet.
So it can only do walk to the door, open the door, back up, walk to the person, grab the thing, walk to the kitchen, put the thing down. It's not just look. The thing about this robot specifically, Lucci, and why I don't want to just shit on this is that if you're handicapped, maybe those are useful things. That being said, there are online, you can unlock a door. Like you can unlock a door with like a phone app or, a voice controlled Google Home can unlock a door and the person can just walk in from your door. Maybe you need someone to take the thing to the kitchen for you. But this idea that you're going to buy a $20,000 device so that you can help this AI company train their product to be better. This is not ready to ship. It's just not ready to ship.
Or doing a full laundry cycle.
But hey, it comes in 3 colors. Yes. That's the creepy thing, man. Whoever's operating has to see what's going on in the house. They have the stereoscopic camera that's being used for the virtual presence. Yes. So there's a whole privacy issue, a complete privacy issue that they barely address in the video. There's a 10-minute video on the internet for it. It's X1 Neo if you want to check out the whole thing. But I just want to point out, these are some examples of how AI is being used today. And it's garbage. This is the point, Greg. They have to hit a metric. Hey, we shipped a product, we unlock the next round of funding, and then we can work on our thing while our early adopters are going to help us train. But how many people are going to help train that robot? Are any one of you going to buy a $20,000 robot that can do 2 things? No. This is what's the addressable market for this shit? At least, I hate the video generation platforms. I think they're garbage. I think they're dangerous. But people are using them. This is worthless. And then God knows how much money they've had to raise to even get to this point. Lucci Doper already ordered. Of course he did. Yeah, that's the scary part, man. It's not I am the 1%. I'm not buying that. I can afford it. No fucking way am I buying that. I don't trust robots at all. I don't trust any of these robots. And that goes for Tesla robots. That goes for any robot. I have a vacuum cleaner robot. I had one. I kind of want to get a vacuum cleaner mop one. The one that can mop and vacuum. But that's it. That's where I cut off my robots. I don't want a humanoid robot that does 3 things remotely okay. Yeah, I should find the video of them. It's there's a video of this thing. I believe it's trying to put things away in the dishwasher. It's hilariously bad. And that's even a human doing it. Here it is. Look at it. Look at it tidy my dining room. Look at it clean my bathroom. Why is it washing its hands? There's this one clip of it. It might be from a different video. I believe the New York Times or Wall Street Journal had another. They actually interviewed the CEO and talked to them about it. But yeah, it's. And it's not even on demand. You have to schedule it. You're like, hey, I'm going to need someone to clean my bathroom tomorrow. You have to email them or use the app to schedule a human to virtually control your robot. And then, yeah, like, what about a humanoid robot that'll watch you sleep? No. And yeah, to the point about sex robots, that's probably the killer app, man. Because if you already look at what people, the loneliness epidemic and how people are using Chat GPT to be less lonely. I'm sure they're going to use their humanoid robots to be less lonely too, I guess would be my point. And yeah, like there's I'm not going to play this video because it's CNBC, but CNBC did a video earlier this week with AWS at their new facility in Indiana. And they're like, we replaced this cornfield with 7 buildings. And apparently it's going to be like 30 buildings when it's done. But it's called Rainier. It's an $11 billion facility that was made in partnership with Anthropic. So it's 1,200 acres of land that's dedicated to training and running models of from Anthropic. It's already up and running, and it does not run on NVIDIA chips. So this is a data center powered by AWS, and they have their own chips that I believe they're called something really cheesy like Trainium. I think that's what it's called, which is like super, super cringy. But yeah, NVIDIA's making chips and facilities. This is already happening. And you have farmers, you have citizens, you have water advocates or clean water advocates that are all complaining about this stuff already because it's affecting everybody. It's affecting the economies, it's affecting the ecosystem, and we're destroying our farmland here in America to do this. But yeah, there's just last month, Anthropic raised $13 billion at a $183 billion post-money valuation. And then included in that were BlackRock, Blackstone, Goldman Sachs, Qatar Investment Authority. So there's a lot of money sloshing around in this, but $183 billion for a company that's, not profitable. Their current revenue run rate for the year is $5 billion a year. So they're generating $5 billion of revenue a year, and they're valued at $183 billion. Does that make any sense? Maybe. But it's the opportunity, right? And what I find interesting is that these big contracts that these companies have, they're not for the consumer side, right? The stuff that we're seeing, the GPTs and like, Perplexity AI search engine. The real money for these companies is coming from enterprise deals, right? But what I find interesting, I was just talking about how Anthropic was working with Amazon, right? Oh wait, they're also working with Google. They announced a deal. They're claiming that they will have a $7 billion run rate next year. $7 billion in revenue. From $5 billion this year. So they're going to grow, they're growing. But you're valued at $183 billion and you're generating $7 billion of revenue, none of which is profitable. But hey, now you have a deal with Google worth tens of billions of dollars. How? How is this going to be sustainable? The deal will add over a gigawatt of compute capacity by 2026. The cost of a gigawatt center is around $50 billion. 1 gigawatt data center is around $50 billion, with roughly $35 billion of that allocable to chips. Now, Google makes chips. Google makes chips. Amazon makes chips. Nvidia makes chips. AMD makes chips. Intel makes chips, right? They're the ones, they're like the drug dealers. Yeah, only 25 years, right, Lucci? Like, how is this sustainable? But you start to see what I'm talking about, the circular nature of this, and how everyone's in on it. Everybody's in on it. But Asif, if you love to shit on Microsoft, how have you not shit on Microsoft? I'm an hour, 40 minutes into the stream and I haven't shit on Microsoft? That's not like me. What am I doing? How have I not shit on Microsoft? What am I doing, guys? Maybe I'm slipping. Like maybe Microsoft's just the smart ones, right? They're not dumb. They wouldn't do something stupid. They never do stupid things. Oh wait, never mind. Microsoft and OpenAI partnership. Microsoft holds an investment in OpenAI Group PBC valued at approximately $135 billion, representing 27%. Oof. Talk about a giant risk. A giant risk on their balance sheet. They have an investment in OpenAI valued at $135 billion. What happens if OpenAI doesn't succeed? It's crazy. And don't worry. Don't worry. OpenAI and Microsoft have that circular relationship too. OpenAI pays Microsoft for Azure hosting, right? So the cloud computing deals, it goes both ways. So this infinite money glitch just spins around the whole industry. It's quite insane. But I guess my point here, this is a bubble. It is. I don't see any evidence that it's stopping yet. But I know what to look for. But this is like, it's not unlike the roaring 20s of the 1920s. And that ended horribly in 1929 when the market crashed. And it didn't get back to its previous levels for almost 20 years. It took a world war. It's not unlike the 1990s. But those valuations were absurd in the mid-90s or the mid to late 90s, right? 1998, people were calling for the market to collapse. That's where I bring back up that chart, right? We should go back and look at the chart of the let's look at the NASDAQ 100. Or let's just look at the actual NASDAQ. This is the .com bubble. I like to consider that it started in 1995, right? So the NASDAQ, which is currently at 23,724, was at 830 in March of 1995. It peaked at 5,132 and 51 cents in March of 2000. So that's like over a 500% gain. 500% gain. Are we in a similar thing? Possibly. And that acceleration really happened in the last 2 years. The Nasdaq went from 1880 to 5,000, right? In a few years. Now, Lucci's asking a really good question. You know, one of my many aliases is the man with the briefcase, right? I drew that logo as I was a young guy in accounting school, and I was starting to have success investing. Mainly, I made most of the money that I've made originally on Apple. I made a lot of money investing in Apple. And I held it for a very long time. Lucci asks over there on Twitch, are you trying to profit on this bubble, or are you avoiding it? I own NVIDIA stock in the largest portfolio I manage. It's not my largest holding. It's my second largest holding, and I'm up almost 100% on it. I think a little more. So, yes, I am trying to profit off of it. Yes. But I'm not chasing many things. I made that position almost over a year ago. I took that position. I haven't added to it either. I just kind of sat on it. But do I... So it's a little bit of both, right? Like, yeah, I own one stock. Out of all these stocks that we've been talking about today, I own one of them. I own the one that's now the largest company on Earth. When I bought it, it wasn't the largest company on Earth. Now it is. I think... I was saying this in chat, and I'll say this here. And, you know, if I'm wrong, I'm wrong. But I haven't put on the trade yet. I'm of the opinion that my best trade ever is still in front of me. And it will be taking a bearish position in the tech industry when this bursts. When this bubble bursts, it will be easy to make money on the short side. Easy. It's just not there yet. So I'm being patient. I'm just like sitting here waiting for my pitch, you know what I mean? Like in a baseball term, or I'm just sitting there waiting for the one-timer. Yeah, I mean, NVIDIA in 2022 was a hell of an investment. I didn't buy it back there. I bought it last year, but I'm already up 100% or more. Yeah, my largest holding's still in boring-ass Nintendo. It's a boring company compared to the hotness that is AI, right? But yeah, like you see what happened with Facebook, and I played a clip earlier, Lucci, where Mark Zuckerberg was talking about, hey, if we're wrong about building this, we can just lease out our money. We can lease out our data centers for compute. He's like already planning for failure, right? So when I'm hearing, you know, one of these companies is spending hundreds of billions of dollars on AI build-outs and they're already planning for failure, that's not encouraging at all. And I do think that they're going to be a short in all this. I think that, you know, you could even just, when things break, you could just short the entire NASDAQ and it'll probably be profitable. Or you can go around and start to find some of these companies. I'm glad you brought this part up because I have been thinking about, okay, well, who are the companies that I want to slam when they really, really go to shit? And here's one that I think is especially boned. CoreWeave. CoreWeave's a company that went public earlier this year at around $40. It was $40 a share. They were struggling to even get their IPO subscribed to until guess who bought $250 million of stock? Can you guess? Can you guys guess? Anyone want to guess who the white knight of CoreWeave was earlier this year? No? Bueller? It was NVIDIA. It was Jensen Huang. They said, we'll buy $250 million of CoreWeave at $40 a share. And then other companies came in. They said, fine, well, if NVIDIA's investing, we'll invest. CoreWeave's now at $134 a share. So they're clearly, people who bought the stock at the IPO are doing well. $66 billion valuation. $66 billion valuation for CoreWeave. That must mean they have a decent amount of revenue, right? Or a decent amount of sales or earnings, right? Maybe earnings. They trade at 19 times sales, which means they do have some sales, I guess. It's not the worst. Like, they have some revenue. $3 billion of revenue. And $1 billion of profit. But their actual earnings per share is negative. Their net income is negative $1 billion per year. So you have a company that loses $1 billion per year that was valued somewhere around $20 billion at its IPO that's now currently valued at $66 billion. What does CoreWeave do? Good question, Asif. What does CoreWeave do? They're a cloud computing company that specializes in providing cloud-based graphics processing unit infrastructure to artificial intelligence developers and enterprises. They lease GPUs to OpenAI, to Oracle, to whoever needs the compute power. They lease it. That business model I was saying that Mark Zuckerberg was talking about doing, CoreWeave's already doing it. Amazon Web Services is already doing it. Google's already doing it. Microsoft's already doing it. And the thing about Google and Amazon that I find interesting is they make their own chips. So they're not going to NVIDIA and asking them for a gajillion dollars of chips and then leasing them. But this is insane. This is a company that literally buys GPUs from NVIDIA with money NVIDIA gave them and then leases them out to other companies in the hopes that they'll make money back. Here's the problem. The lease prices on GPUs are not going up. They're actually it seems like they might have peaked. Like what these companies are making from an revenue standpoint, their average revenue per GPU is going down. Let me see if I can find that news story. Yeah. Yeah, here's another one. This is a different company. It's just funny. While I'm searching for something, I find something else. This is last month. NVIDIA signs $1.5 billion deal to lease its GPUs back from Lambda. 18,000 GPUs that NVIDIA sold to Lambda. NVIDIA is now paying them to lease them back, and then they're going to end up buying more GPUs from NVIDIA that NVIDIA... You see what I'm saying here? Do you see what I'm pointing out here? It does feel like an infinite money glitch. It's absurd. Yeah, this is a year ago. Lambda received $300 million cash infusion to support training clusters spanning thousands of NVIDIA GPUs, deploying tens of thousands of the H100. And then 2 years later, NVIDIA had to pay them to lease them back. CoreWeave It's everywhere, man. These companies, like the average cost. I'm trying to. Let's see if I can find a average cost to rent A100. So yeah, this is here we go. We might have to keep coming back to this on the show. I found a useful table from this company, Lambda. So Lambda, you know, they'll rent you any of these GPU compute things. So price per GPU per hour. You can get on-demand 8x NVIDIA B200s for $499 a month. But the A100s, these used to be $3 a month. Or sorry, yeah, $3 an hour, $3.80 an hour. They're down to $1.29 an hour. Like 2 years later. So are these companies are these sustainable models that they can buy more expensive GPUs and then turn around and lease them? Because if everyone's doing this and there's competition from much bigger companies, you got competition from Amazon, you got competition from Google, you got competition from Microsoft, you got competition, you know, from whoever the fuck Oracle's doing. But like these other companies, these I don't call them subsidiaries because they're not, like these companies that NVIDIA has a stake in, CoreWeave, Lambda, like these different companies that have ownership dynamics that are dubious. What happens when they all run out of money? This is another wobbly leg on that stool I'm talking about. Electrical power generation, the leasing of GPUs, this whole business model, which is not profitable. I told you that CoreWeave, like the largest one in the business that's standalone, make a new one. Yeah, just make a new lease company. Exactly. Or make a new GPU, right? That's what NVIDIA's doing. Every time they see that the cost of their previous GPU goes down, they make a new one, Lucci. Make it faster. Harder, better, faster, stronger GPUs. 350. Yeah. So that's the wobbly stool, man. I don't think so, Greg. I don't think... Maybe there's a bailout down the road. Maybe. Or maybe, like, it'll be a federal thing. Like, the Trump administration's like, this is a space race, and we're gonna contribute X amount of dollars. Oh, he's over there on YouTube. I'm multi-streaming now, Lucci. Sorry about that. Yeah, he's over on YouTube. We're on YouTube, Twitter, and Twitch still for now. But yeah, I'll try to reach it. I'll try to be more clear where people are talking from. But yeah, we are over there on the YouTube. We're also on the Twitter, which I believe this used to be Periscope. Hello, former Periscope people. How are you? But yeah, it's this is weird, right? Does this not seem like a convoluted mess? And it's possible they get bailed out, Greg, but maybe they won't. It didn't happen in the dot-com bubble. Or there's this, it's called moral hazard, right? What happened, like, in 2008, Greg? Not every bank got bailed out. They let Lehman Brothers fail. They let Bear Stearns go bankrupt. But then they bailed out everyone. So what is the equivalent here? I don't think, the way it's set up, Greg, I don't think that it's going to be like, oh, it's a systemic risk that CoreWeave is going bankrupt. But CoreWeave going bankrupt might be the Bear Stearns moment. Bear Stearns went bankrupt in March of 2008. The bubble didn't officially burst until September, August of 2008. So maybe that's one of those canary in the coal mines that I'm talking about, Greg. How I know what it's going to look like when it happens. When you hear Lambda is shutting down or CoreWeave is shutting down and NVIDIA has to take a write down on their investment, do you think NVIDIA is going to care about, oh, we lost $250 million on CoreWeave? They're not going to care. They're a $5 trillion company. I think that's what's going to happen, though. You're going to see these less profitable companies, or the not profitable companies, when they start to fold, that's when demand for the GPUs will roll over. But it's not like NVIDIA went under when the crypto market stopped, buying their GPUs. They figured out the next thing. Now, I'm not saying there will be a next thing, because so many of these companies seem to be going all in on AI. But there's a lot of contracts that NVIDIA has outs on, where if you don't hit these metrics that NVIDIA has set in their previous investments, they're not obligated to invest anymore. So I'm not saying that it's line go up forever. I don't think that. I think that there will be a point that this ends. But the point of this episode, the point of this whole show today, was to point out that bubbles can inflate far longer than people realize. That's it. Like, bubbles can inflate far longer than people will think is reasonable. And it's like at the bottom of 2008, in the spring of 2000, the 2008 bubble, 7, 8, 9, right? And the bottom in 2009. I'm going to pull up a chart. This right here. This is the financial crisis, right? This is the housing bubble. Housing foreclosure started to ramp up here. This is where you got warnings from mortgage companies countrywide. You had a big issue here. The market peaked in 2007. What happens is, you have this cascading crash all the way down, right? And then there was this, oh, maybe things are better. No, they're not. This is what we're looking for. This is called seller's capitulation, right? Seller's capitulation. That means giving up. What we're looking for is buyer's capitulation. And that's what you saw in 2000 in March. Everyone gets in the pool. Everybody's in the pool, right? We're all in the pool. Maybe it'll look better. Yeah, it'll look better on the NASDAQ chart. It's a parabolic move to the upside. But look at this. Look at the run up. Every freaking week, the NASDAQ hit all-time highs, all-time highs. Oh, no, there's a sell-off, all-time high. Oh, no, there's a sell-off, all-time high, all-time high, all-time high. Fine, I'll buy it. And then it crashed. But wait, maybe it's not crashing. And then it crashed. Maybe it's not crashing. And then it crashed for 3 years. We're not there yet, in my opinion. It's a bit too orderly. And the companies at the front of this are not absurdly overvalued. They are in nominal terms when you look at the market capitalization of things. No, you don't want to be the buyer that capitulates at the top. And that's why I'm not telling that's why you're not hearing me say, hey, buy Amazon. I'm not saying that. I'm not saying buy Microsoft here. I'm not saying buy Facebook here on the dip. I'm not telling people to buy Apple. I'm not even telling people to buy NVIDIA here. I do think NVIDIA might keep going up, but I don't necessarily think it's safe to buy it here. I think you had an opportunity earlier this year when, the tariff fears were there. I think there was an opportunity to buy Nvidia at that point. But like now, no. This is a scary time to be buying things. But my point is, like, it can keep running for a while. And it's when, no offense to my sister-in-law, but when my sister-in-law is complaining about not owning Nvidia, that's when I'm going to sell. Because she's not the person who's paying attention to the market 24/7. When she's like, hey, we should own Nvidia, to my brother, I'm going to be like, okay, I'm selling it. Like, that's kind of where I'm at with it. But yeah. It's, we're just not there yet. I don't think we're there yet. Nice stream. Decent length. I don't know. Do you guys want... I don't know. I didn't really do much chart research, and it's also just the first month of the quarter. I could look at some quarterly charts real quick. How about I do that? But that concludes the AI discussion. Any questions? Comments? AI sucks, no questions. Got it. Yeah, man, it's not that, like, look, there's some cool stuff happening there, man. Like, I think the universal communicator features that, like, all these companies are trying to do, where you could speak to me in Russian, Lucci, and I would hear it in English, and then I could speak to you in English, and you could hear it in Russian, even though you understand English. I'm just saying, like, that's, I think, going to be hugely important for the world, being able to communicate with each other more easily. I've actually been paying attention to the labor market, Greg. I think it sucks to say it, it's affecting our industry more specifically than any other, Greg. Graphics designers are being laid off because of AI image generation. You see a lot of thumbnails on YouTube now, Greg. A lot of those are AI generated. So people are losing their jobs there. Writers, copy editors are losing their jobs. People who are journalists are losing their jobs. It's now over 50% of the over 50% of articles generated on the internet every day are AI generated as opposed to human written. I think the potential negative stuff will outweigh the positive stuff. I think you're right, Lucci. I think you're right. But I want to point out that there are good things about AI. It's not all terrible. I think it's good for accessibility. My brother uses those Meta AI glasses. They're just the regular Ray-Bans. But like being able to have point of view capture for someone who's visually impaired, that's important. I think the research being done in chemistry, that example of Google DeepMind, they actually had a breakthrough in protein analysis. The stuff happening in computer science is actually interesting because you have, on the one hand, you have people who are using these chatbots to program, and it has decreased the demand. Like, Greg, to answer your question, junior level computer scientists are not getting hired, and people are going to decide not to go that route in their education decisions. So that's going to lead to a whole world where there's not going to be a next generation of senior programmers. Then who's going to be the one who's educated enough in programming to know how to use the chatbot to make the programs? That's a concern. And then the concern on the AI journalism front is that they don't vet the information. You get hallucinations, you get false reports. And like, fact checking is important. Like, I think that's an issue. There's the whole side of it where, how are they going to pay copyright holders for stealing our information? There's a lot of questions that remain in AI that have not been answered. And I bring it back to the profitability of these companies that are being valued. Anthropic at 183 billion, or OpenAI at $500 billion. Like, how are you folks going to make money? How are you going to pay me for monetizing the shit that you made out of my shit? The Getty Images just signed a deal with Perplexity today, and their stock was up a ton on the news. So it's like, it's happening slowly. But are the AI companies going to acquire the journalist companies, the media companies, or the IP holders? When does this end? Where is this going? But yeah, I think that's a legit question to ask. But yeah, Greg, the other side though, where unemployment will collapse, is when we actually have robots that can replace people. But you're seeing it, like Panera doesn't even have anyone take your order anymore. It's a tablet when you get there. So I think we're going to start to see more of that. McDonald's is using AI in their drive-thrus. I think Taco Bell's experimenting with it. So like the working class people are going to start getting replaced through automation and through robotics. I just don't think we've seen it at a mass scale yet. And like you said, that one robot, it can't do anything. And like Elon Musk keeps trotting out his robot, but he even said, like, we're going to start ramping up production on it by the end of next year. Like, okay, Elon, I'm sure. Full self-driving is another example. Like, that's supposed to disrupt the whole world, Greg. Do you trust full self-driving in your Tesla? I don't. And they still have these babysitters in those cars in Austin. They have safety officers inside of every Tesla that's autonomous right now. Because they don't trust... Even Tesla doesn't trust their FSD vehicles. So it's like the promise of AI and the hype of AI has led to some layoffs in some sectors, but not nearly as much as we would have seen it yet. Not nearly as much as we would have seen it yet. Yeah, but if you get what you want, Greg, Greg says he's not ready, he does not trust FSD, it's not ready yet, but he wants it to be. But it's not. Let's say they actually succeed. That's going to completely throw the trucking industry on its head. That's going to completely throw the Uber market and the taxi cab industry on its head. That's millions of people out of work. So, like, if they are successful in what they claim they're working on, then yes, there will be mass unemployment. We're not there yet. We're seeing it in journalism. Definitely seeing it in media. Not as much in video creation, because they make this guy's like, the future of sitcoms is this shitty clip of Friends that sucks balls. It's like, no, it's not. Like, humans are still creative. AI has not proven to be that yet. It is a prompt-based system. You need the human prompting the AI. So it's like, learn how to be a prompt engineer if you want to keep your job. Learn how to use AI to augment your job. Become more productive if AI is truly a threat to your industry. And it's not to every industry. It's just not yet. But yeah, before we go, NASDAQ, all-time high, had an outside quarter and up, continued it. It's a continuation. So you keep buying the NASDAQ above 602.87 throughout the end of the year. SPY hit an all-time high this month. Same thing. Outside quarter and up, you buy it above 667.34 on the SPY. Dow Jones, the diamonds, as they like to call it. This is not the same. It was a little messier, but yeah, it did hit an all-time high. That's the market. The IWM is the Russell 2000. It hit an all-time high this month. It did, just barely. So it's happening. Even the small caps are turning around here. Take-Two Interactive hit an all-time high this month. Obviously, we had EA. They got taken out last month, so they're trading inside month. That deal is still waiting to close. Apple hit an all-time high yesterday night, but did sell off for most of the day. I have one last target on this stock, and I might be wrong. I might have to. If I'm wrong, I'll do another one. If it goes above 323 a share, I will give us one more target. But I called it my final target, 323 a share on Apple. I would not buy Apple here. And what's funny about Apple is they're very behind on this whole AI thing. Siri sucks. Apple Intelligence. Did you hear that? Did anyone hear that? I said the thing sucked, and it goes, uh-huh. Oh, God. So terrible. So god-awful. In the gaming space, GameStop is still just treading water. Many Jaboofers got very excited when the president tweeted out a picture of himself as Master Chief saying power to the players. And also nothing happened. So yeah, power to the players over the weekend. How'd that work out for you, players? You bought the stock on Monday. Oh my God, Trump. Did you see Trump? Did you see him? Did you see the White House? Oh my God. It's amazing. We did it. We matter. Senpai noticed us. Did you see it? I don't know if you're on Twitter. You're probably not, which I envy you. White House. Oof. Let's see if I can find this stupid thing. They tweet like a 12-year-old, so it's hard to keep track of all their garbage. God, they tweet a lot. For someone who's not on Twitter, the president tweets a lot from this account. Let's see if I can find it just by going through their image search. I would never browse this live on stream, though. It's a dangerous game. Here it is. Okay. This tweet. This was the tweet, right? They're like, oh my God, can you believe it? Yeah, 40 stars on the flag, piss tint. I did not use the anime meme. Anyway, so they're like, oh, look at it. We're going to go to the moon. So if you bought the stock on Trump's bullshit tweet, you bought it above 24 a share. It closed the week below 23. You're down over 5% because you bought it on a tweet. The amount of people who were like, it's going to go to the moon. They're idiots. They're idiots. And the whole point was that this was a quote tweet of GameStop declaring an end of the console war, right? That was the thing that triggered this, right? GameStop's like, the console wars are over. Which, okay. Like, okay. Because the whole Halo news over the weekend. Over on Friday of last week. But yeah, if you're buying stocks because the president tweeted a slogan and a shitty AI generated meme, you might be an idiot. And I think this is this 5-day chart is why I don't own GameStop in any size anymore. In my biggest accounts, I don't own it at all. I have one call option in one of my large accounts, but I don't own the shares in my biggest accounts. I own some shares at lower prices from when I was buying it in 2021 in my retirement account and another account that I managed, but they're much smaller accounts. Any account with a lot of money in it does not have a single share of GameStop because they keep fucking their shareholders. And I don't trust them. But yeah. Google hit an all-time high this week. They're kind of killing it. Microsoft, I think, sold off this week. Where are they? Yeah, they hit 555.43 earlier this year, 553.72. So they did not hit a new high this week before selling off. This is one to pay attention to because it could get ugly. If there is a sell-off, Microsoft would be one to pay attention to. I'm not going to go crazy and say to short it, but yeah, if you want to, there could be a shooter down signal below 506 if you want to be bold. Oh, I can hear it now. The trick-or-treaters are out. It's like a Zerg rush. Yep. Microsoft down. Nvidia hit an all-time high this week. A lot of news out of... Yeah, I kind of glossed over it, but they announced a partnership with Eli Lilly. They're building a supercomputer for drug research at Nvidia. They showed that they're now building all of their H200. Their H200 AI GPUs are being made in America, in Arizona, and they showcased the entire supply chain. They showed how their technology is touching almost every sector in the world right now. They just got big news out of China that they're going to be able to sell their GPUs back in China. So Nvidia is kind of at the center of this entire bubble. I think it's one of the most important stocks to pay attention to. And yeah, you buy it above. You just buy the breakout above 212. I wouldn't buy it here, but if you're a trader, that's the level to watch. 212 and 19 cents, which would be an all-time high. Tesla's trying to get back to its all-time high. This one's interesting because I think they got a lot of headwinds. They just had a great quarter because this was the last quarter with the $7,500 tax credit. That's gone. I'm not sure what to think of that going forward. I wouldn't be a hero buying Tesla here. Also, yeah, Elon Musk is throwing a big tantrum about his $1 trillion pay package. He's begging people to to vote for his $1 trillion compensation package. He's upset that he gave up his majority stake in the company. He owned almost 30% of shares, but then he sold some to buy Twitter, and now he doesn't own enough to influence the company anymore. So he's sad, and he wants us to give him back his voting rights to the tune of $1 trillion if he hits some metrics. He claimed that he didn't want. Let me see if I can find that the robot army video. I'm not gonna bother. It's ridiculous. But yeah, Tesla has a shareholder meeting next week. I voted no on his compensation package. I don't own enough shares to matter. It seems like he might get it, but we'll see. He did go off on a couple of shareholder advocacy firms. Taiwan Semi, all-time high. This tariff news is going to be good for that. Yeah, I don't want to be part of building a robot army if I don't have some level of influence over it. That is the quote. Thank you, TJ. We reported all that on shacknews.com if you want to check it out. Ubisoft still in the toilet, in case you guys were wondering. So the turd miner, mining turds here. I was a little premature in buying this stock. I'm down about 15%. So don't tell me I don't hold myself accountable. I do. When I screw up, I tell you. Ubisoft is a turd. It's probably going to be a turd for a while longer. But as the turd miner, I think it's an interesting thing to take a shot on. So I own a very small speculative position in it, and I wouldn't be against anyone else checking it out. But you got to realize that this is Ubisoft we're talking about. And it once was a $24.55 stock. It's sitting down here at $1.74 right now. So if it goes to zero, it goes to zero. I'm not betting even. I think I'm less than. It's like 0.2% of my portfolio. It's a very small position. But yeah, it's one to pay attention to in the gaming space. It seems like CD Projekt's kind of got its groove back. Traded It's kind of trading around this inside quarter space right now. So inside quarter, something to watch. See if we break out from that inside quarter or if we break down. A breakout on the quarter would be above 1945 per share. A breakdown would be below 1611 per share. We don't know. Do we have a release date on The Witcher 4? Either way, The Witcher 4 is coming eventually, so you might want to own the stock ahead of that. That being said, GTA 6 is coming. That's going to be a reason to pay attention to Take-Two. And of course, how could Luigi not talk about Nintendo? Mario. Nintendo's stock. It did that thing, man. It did that thing I said it was gonna do, man. It did it. It did the thing. It definitely did the thing. But boy howdy, is this a fascinating chart for... Man, I miss my trading mentor, Rob Smith, because this is the strat right here. Man, is this the strat. This is such a strat-ass looking chart. Nintendo traded inside the June month in the month of July. Then it traded outside. It went down below the July month and it went above it. It hit the uptrend, that freaking uptrend I've been talking about. I call it the Switch uptrend because it began when the Switch was released. It was a series of highs. It's a series of highs. Hit a high in 2018, 2017. Hit another high in 2021. And it hit a high of the year in 2025 at this uptrend. And then it sold off. It went inside the August monthly bar. And at the time, I said, if it goes below 2130, look out below. And guess what it did? It went below 2130. And it dropped all the way to 1955 per share. Why I find that interesting is what's interesting is when there is an outside bar, we get another uptrend and downtrend. And we were very close to the downtrend when it decided to reverse. So why is this important? Why am I raising my voice? Why is Luigi number one? Because we have a potential rev strat in Nintendo ahead of the month of November. Why does that matter, Asif? Oh, what happens next week, you guys? What happens next week? What caused the sell-off, Greg? It's purely technical. It broke that level. It broke this level to the downside. It went down on the news. What caused it to come back is the question. Bloomberg reported that Nintendo has reportedly, based on conversations with their supply chain members, increased supply of Switch 2 by the end of March 2026 from 20 million to 25 million Switch 2s. Boy, that's a lot more Switch 2s, isn't it? You have a rev strat now. This whole clusterfuck. You could break out of it. Just potentially. Above 22.16 per share. That's the number to watch for the entire month of November. Above 22.16 per share. There would be a buy signal on the monthly chart. I reiterate, Nintendo reports earnings next week. Keep it locked on Shack News. We will be reporting it in the middle of the night. A potential rev strat? It's not even my birthday, Nintendo. I am so pissed I didn't buy this stock below 20, man. That might have been the opportunity. And yeah, they sold 5.8 million units of Pokemon Legends. We'll find out how many units of Donkey Kong sold. We're going to find out all sorts of numbers. We'll find out how many Switch 2s are out there as of the end of September, right? which conveniently doesn't include the Pokemon launch. So we won't know unless they choose to tell us how many Switch 2s they've sold in October, which is probably a lot, because a lot of people were buying the Switch 2 to play Pokemon Legends, despite what the internet tells you about that game not being any good. But how could I leave you without talking about a rev strat on the monthly chart in Nintendo? Look at it. Inside month, outside month, inside month, rev strat above 22.16 per share. Rest in peace, Rob Smith. But man, that's a strat ass looking chart. That is every kind of bar. That's a 2, that's a 1, that's a 3, that's a 1, and that's a rev strat. Oh, it did sell well. They already reported the news, Lucci. 5.8 million units sold in 3 days. 3 days. They made back their budget times 10 in 3 days. It doesn't matter what the jaboofers on the internet say. It doesn't matter. It just doesn't. YouTube commenters can talk all the shit they want. Every idiot on Twitch, every stupid thumbnail where it's like, Nintendo bad, they're doomed. Why not listen to the one guy who called this? All the way back here. Why not listen to the guy who was like, hey, buy Nintendo. If you asked me in 2014, Greg, what did I tell you? What did I tell you in 16? What did I tell you in 17? What did I tell you in 18? What did I tell you in 19? I haven't shut up about this stock for years. But yeah, listen to Jaboofer Jones on YouTube, because his thumbnail, his AI-generated thumbnail is like, oh, Nintendo doomed. It seems to be selling pretty well, the Switch 2. Rev strat. Not in effect yet. No, Greg. I didn't say buy it. I said buy it if it goes above that price. You will have an active buy signal on the technicals. This is just the chart. Obviously, I own it. Yeah. They don't talk, but they're wrong, Lucci. Quality of the game, bad. It won't sell well. They ignore the fact that Pokemon fans, they just love slop, man. You're just like, oh, more slop. Thank you very much. Then don't act like you're calling out the company. Oh, they're doomed. Are they? Are they really doomed? How many companies would be doing backflips for 5.8 million units sold of a game? Any game this year. But they're doomed. I'm just saying, stay out of that lane. If you're going to talk about a company's, if the actual operations of the company, fine. If you want to just do a review, everyone's entitled to an opinion in a review. If you don't like a game, don't like a game. But many of those jaboofers, Lucci, are not talking about the quality of the game. It's the clickbait that I'm talking about. I don't want to, I'm not here to call out individual people, man. I'm not trying to start beef with anyone. But in general, I just think there's a bunch of jaboofers out there who are wrong. R-O-N-G. But I'm telling you, man, 22.16 per share. Watch it. And if it doesn't, if it breaks down below 1955, look out below. I'll tell you both sides of it. But I think that's interesting, man. Earlier this month, I was like, uh-oh. Is Nintendo done? Because it hit my uptrend. Every time it's hit the uptrend in the past, it's sold off real hard. Is this the time it finally breaks out of this uptrend is the question. Is this the time? And it's important to note, this stock's up on the year. This stock's up 46% on the year. That matters. Into the end of the year, fund managers on Wall Street want to own stocks that are up. They don't want to own stocks that are down. It's counterintuitive because the cheap stocks are the ones that are down usually, but they're down there for a reason. But yeah, I think that'll do it. That was a hell of an episode. Thanks for tuning in, everybody. I hope you learned something. Hope I got you thinking. And if you disagree with me, more power to you. But yeah, follow us on all the places. This VOD will live on our YouTube channel. It'll also be available on Twitter. So if you weren't able to join us live, you'll be able to watch it over there too. I do this once a month. At the end of the month, I look at monthly charts, but I did feel like talking about the infinite money glitch in the AI space this month. I thought it's an important thing. The next, oh no, really? Oh God. The next episode is on Black Friday, which is a day off at Shaq News, but I'll be here. Oh God. I don't get any days off. Ever. November 28th. November 28th will be the next episode of Game Trader Live. It's just, that makes me a sad panda. But yeah, I like doing this though. And I like hanging out with you guys. So thank you so much for spending time with me on this Friday afternoon. And yeah, have a very happy Halloween. Be sure to check your AI candy for AI slop. Or your Halloween candy for AI slop. But yeah. That's going to do it. As always, manage your risk. Know how much you're investing. Be willing to lose all of it if something terrible happens. Or, like, define how much you're willing to lose. And if it drops by that amount, get out. You can always get back in. But manage your risk, especially in this market. There's so many overvalued companies right now. This show is designed, like, there's a component of this show that I haven't been able to do during this era where I look for cheap stocks and I highlight them. I still am looking, guys. I just don't see many. I don't see a whole lot of opportunities out there. So when I do, I flag them for you. But I don't really see many options. So right now, I'm going to focus on why do I think things are where they are? Where do I think things are going? I think I flagged the reasons why we are where we are, why the bubble may burst when it does, and the constraints for the AI bubble that exists. I think we kind of hit all those things. So I appreciate you guys listening and engaging in this conversation and keeping an open mind. And yeah, manage your risk. Have a happy Halloween. I'll see you on November 28th on Black Friday. And yeah, this has been Game Trader Live with Asif Khan, breaking down the AI tech bubble's infinite money glitch. See you next time.